Welcome back to Explain the Charts. Today is March 6th, 2025, and we're analyzing NZDUSD, combining both news and technical analysis. We'll examine recent events and what the charts tell us about potential future movements. Let's start with the news. According to recent reports, the NZD/USD pair reached a fresh weekly high near 0.5750 thanks to China promising additional stimulus. Also, Reserve Bank of New Zealand Governor Adrian Orr will resign after nearly 7 years in his role. Also, according to a Reuters poll, New Zealand home prices are expected to rise modestly this year and next, following a decline in 2024. And we see that the New Zealand dollar rebound continued through trade on Wednesday, extending back above 57 cents amid broad-based US dollar weakness. Now, let's dive into the daily chart to see what insights we can glean. Looking at the last few months, we see a downward trend overall, but with some recent upward movement. Notice the volatility with some significant swings up and down. The recent news about China's stimulus could be correlated with the latest green candle, suggesting some upward pressure. However, the news of Adrian Orr's resignation introduces uncertainty, which could lead to volatility. There appears to be resistance around the 0.64 level. As we can see from the historical data, the price has struggled to break through this level multiple times. We'll want to keep an eye on that level if the price continues upward. Let's narrow down on a particular interesting section of the chart. This is the period from late October 2024 to early December 2024. We can see a volatile up and down trend, with some major fluctuations. Now, let's switch to the 1-hour chart to get a more granular view of recent price action. On the 1-hour chart, we see a lot more noise, but can potentially make out a small upward channel. We can clearly see smaller support and resistance levels that might not be apparent in the one-day chart. Let's zoom in on the most recent day to see if we can discern more information. As of right now, there's a slight upward moment. If we compare this to the one-day chart, we can see this movement is merely a fraction of a larger downward move. We can check this further by drilling into the 15-minute charts. However, with Orr's resignation, we might see the New Zealand dollar taking unexpected turns, so caution is advised. Looking at the 15-minute chart, we can get an even better feel for short-term trends. We can see the price bouncing within a very small range, indicating a potential consolidation period. With the short-term scale of the chart, this would be an ideal chart to make small trades in the very short term. In summary, the NZDUSD market presents a mixed picture. China's stimulus promises offer a potential bullish catalyst, while the resignation of the RBNZ governor introduces bearish uncertainty. Key price levels to watch include the resistance around 0.64 on the upside and support around 0.56. It's very difficult to predict whether the price action will continue to go up or down. If the price breaks above 0.64 with strong volume, it would suggest continued bullish momentum. However, we will want to see some economic news or announcements, such as interest rate changes, to cause movement from this consolidation pattern. Also, further drops and breaks below 0.56 could signal further bearish pressure. Watch for upcoming economic data releases from both New Zealand and the US, as these could significantly impact the pair. Thanks for watching Explain the Charts.